Welcome to the January 15th, 2018 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. The amazing rally took record highs nearly every single day this week. It has investors saying now that the Dow's at 25,700, what do we do? We're going to cover investment strategies in detail at NetWorthRadio.com for this week's audio broadcast with more charts and graphs. So the new highs, the big story of the first 2 weeks of 2018, the tax rate's a big factor because that spikes after-tax corporate earnings by about 30%. It looks like theoretically there may be another 5,000 Dow points to go before this thing is at its theoretical limit. Interest rates, that leads to inflation. Inflation fears started the week. You can see this spike of 1/5% in both the T-bill and the 30-year Treasury that marked the first part of the week. But the inflation reports came out. Now this is producer price inflation. This right here is zero inflation. Notice a minus 0.1 for last month was a big surprise apparently to the bond markets based on the bad behavior early in the week. Minus 0.1% for producers, companies. Now, wage push inflation was what was expected along with energy inflation, did not materialize. In fact, the consumer price index, you can see this now in deflationary territory in some of the reports, and this most recent one, consumer price is up just 0.1%. Well, those two pretty much cancel each other out to say zero inflation when we actually expected an acceleration. That leaves pockets of opportunity in the discounted part of the bond market. That will be also covered in this weekend's NetWorthRadio.com audio broadcast with more charts and graphs. What to do about inflation? Well, here we've got the natural gas and oil pipelines together. Look at the Gulf infrastructure here. Of course, Permian Basin is a big focus, also up into Oklahoma, the Mississippian, here in Kansas. The increased volume in liquid natural gas is extraordinary. Now, one of the reasons oil hit 64 this week, this is a report from one of our contacts that are deep in the industry. The production declines in new wells. They get a lot of production and then they tend to level off asymptotically. Those declines are coming to be more substantial than anticipated, which means they're going to need more wells if they're going to sustain production increases to match demand. Well, this infrastructure could be the most valuable in the world based upon 12 more natural gas, exporting liquid natural gas plants along this Gulf Coast of the United States. Those details, how do we take advantage of that? Well, we've already successfully put that into the allocation models, and we'll give you more details on how we believe it evolves now that we've covered the first half of January. I'm Spencer McGowan. Thank you for joining us today, and get more at NetWorthRadio.com.